we'll take, it is the third book for CBSE and ISC. For the state board, it is a common. Two questions always come from this: management accounting, or it is also known as analyze of financial statements. So in that, what we are going to do, there are so many things in that. You have a balance sheet, companies accounts as per Schedule 3 of Companies Act 2013, that format of revenue account, profit and loss account, statement of profit and loss account, and a balance sheet is there. So that, along with that, you have analyzing of accounts, that is accounting statement, that is you have comparative common size, you have that. So what I will do, I'll start with the accounting ratios first today. Then I will go with the format of company accounts, that is as per Schedule 3 of Companies Act of 2013. So once if I put the format, the same format is applicable for your common size and comparative income as well as balance sheet. The next one will be left with your cash flow statement. That is entirely different topic. So we will try to take, and we will try to finish this. 20 marks are there for ISC and CBSE. See that options are there, or it's there. So please see that here, if you do, first you try to attempt that B section and try to secure the whole 20 marks, then you will get a boost. Yes, now I can do the A part. There is no choice, or are there choice. But you have to do the complete A sections, like 10 questions. Some ISC has full 10 questions to be answered. CBA has about so many 10 to 12, so many questions are there and all. That pattern you are very well known about it. So now I will start with the accounting ratio. The third book, where some in ISC they tell management accounting. In CBSE they will tell analysis of financial statement. With all those topic wise are there in that. Okay. For a state board, not necessary. It is mixed, like you have state boards are with 12 marks, one comparative common size, or income, or comparative income, or a balance the common size, or sure question. One final accounts of companies, that is for 6 marker, either P&L statement of profit and loss, balance sheet, that will be asked, like either of that. Then ratios, one sure question is that. You have lot of choice to decide what best you can do for the state board. Fine. Now we are taking accounting ratios. What is a ratio? Ratio is a mathematical relationship, two related items of a group expressed in quantitative form. So here ratios, where all the industries, why we companies use ratios for your improvements, for your this one, like a growth, like growth of a company, then competitive market to enter, all suitable for the business. What is suitable? Whether to increase your solvency thing, or your liquidity ratio, or your profitability ratio, all those can be studied. So whatever ratios are implied in your accounting statement for based on financial statement are expressed in arithmetical relation between various accounting variables. So this one, others are your advantage, disadvantage, all those are common one. You can just read that, and you usually you get in MCQs. So that is what you can prepare. Now what we'll do more on practical aspects, so that you will be perfect. Yes. So by one. Okay, we'll just sit there and keep. Now ratios. Now we have seen the definition. Now we have profitability ratios. We started. Profitability ratios. Now in these ratios, we have gross profit ratio. That is nothing. Gross profit. Gross profit divided by revenue. Revenue from operation into 100. All your profitability ratios are multiplied by 100, huh? Remember. So here revenue from operation is sales minus the returning. Sales return, huh? This is. So that's all. Now the terms are different. When we started using company's account as per 2013, we have changed all the way of taking things in statement of profit and loss account and the balance sheet. But that is the first ratio. So how to get this gross profit? You know, no, when we prepare trading account, take your sales, closing stock, minus your opening stock plus purchase with direct expenses, purchase less return, direct expenses. You arrive at a gross profit, horizontal P&L, what we will do. Fine. Otherwise, if they give you in a statement, you take sales plus closing stock you add, minus all those other items. Those are known as, see, opening stock plus purchases, less return plus direct expenses minus closing stock gives you cost of goods sold. Or, see, now next one. Next formula is cost of goods, cost of goods sold, or it is also known as cost from operating activities, cost from revenue from operation, cost from revenue from operation. Correct? They may give you cost from revenue from operation is nothing cost of goods sold, huh? So how to arrive this? There are two methods. One is you can take opening stock, that is inventory. In some books, stock they tell or inventory, one and the same, huh? You have inventory. Yes. Plus your purchases, less return, outward, that is sales return, plus less return, plus your direct expenses, carriage involved, then you have wages, all those which are related for lifting your purchase. Then you have minus your closing stock or inventory. Correct? This is for you get cost of goods sold. Or if they don't give you all this, they may give you revenue from operation. Revenue from operation. See, the formulas are important, huh? Minus your gross profit. Gross profit. If you remember the formulas are enough, just substitute and get in. 5 minutes you'll be finishing the 6 ratios what they give you. So, or 3, 4. 3 marks means 2, 3 ratios they give. For state board, they'll give 6 ratios, well, 12 mark. So, just put this and then try to multiply. So, if they don't give you cost from revenue from operation or cost of, that is nothing but cost of goods sold. If they don't give you purchases, opening stock and all, you will know that revenue from operation minus gross profit will give you your cost from revenue from operation. Cost of revenue from operation. Clear? Yes, this ratio is clear for you. Now let us go with the other ratio. Net profit rate, that is operating ratio. Operating ratio. Operating ratio or expenses ratio. Oh, what is this? This as a formula of cost of goods sold, that is cost of revenue from operation plus your operating expenses, whole divided by all is with revenue from operation only, huh? Net revenue from operation into 100, all are 100, huh? Profitability ratio comes, please see that you multiply and bring into percentage. So now cost of revenue from operation or cost of goods sold plus operating. What is this operating expenses? Operating expenses are your finance, that is not finance cost, huh? Administration expenses or overhead plus your Selling and distribution. Selling and distribution. Selling and distribution expenses. Correct? So this is administration means all salaries and all. Whatever expenses of the office bearing. Selling and distribution, sale, promotion, carriage outward, then your advertisement, all those for lifting, carriage outward, all those lifting your sales. These are. No finance cost should be taken, interest on debentures. Those are all in your debt equity ratio, solvency ratio. We will see that later. Now let us part by part we will study. Understood this? Cost of revenue from operation plus operating expense divided revenue from operation into 100. So multiply by 100. So administration and directly they may give you administration or selling and distribution, or sometimes they may bifurcate. Salary they may give you, then you have this one like all office expenses they'll give you. Fine, like that they'll give you. In selling and distribution, sales promotion they'll give you. Carries outward they'll give you. Some part, some 3-4 items which you club together and make it a selling and distribution. And here you make it a administration. Is it clear? Usually the problem in examination directly they give you. You're just adding and taking. Clear this already. Then we are coming with the net profit ratio. Net profit ratio. This is net profit divided by revenue. All is revenue from operation only, huh? Revenue from operation into 100. Yes? Now net profit is, if they give you net profit, well and go. So sometimes they'll give you gross profit is given. You have operating expenses and selling and distribution. You can take the net gross profit minus your selling and distribution minus your administration expenses will give you the net profit. Indirectly, if you are supposed to find out the net profit, you have to do that. Otherwise, directly if they give you, or if they give you a statement of profit and loss account, then the net profit will be, gross profit will be, all the items are there. We are just going to see what ratio they are expecting. That ratios we are going to take, multiply and get the answers. Is this clear? Let us take one problem for profitability ratios. Yes, they are told from the following calculate operating profit ratio. Revenue from operation 6 lakh they have given. Cost of revenue from operation already given to us.